All right, good evening everybody, and welcome back to Walks and Wall Street. Hopefully you all are doing well today. It is October 19th, 2023, and today was a very important day on Wall Street. We had a lot of big events happening. At the very end of the day, we had President Joe Biden speaking, giving his live update and asking Congress for quote-unquote urgent budget requests to provide aid and funding to both Israel and Ukraine, which should have some impacts on the financial markets. But I would say most importantly today, one of the most, I would say, anticipated events for October 19th is that Federal Reserve Jerome Powell, or I should say Federal Reserve Chairman Jerome Powell, delivered a speech today at the Economic Club of New York. It was more so along the lines of an interview. If you haven't checked out that interview, I would highly advise to do so. Let me go ahead and drop that link in the description. So if you see my name highlighted, I dropped a link in the description that's going to take you to CNBC.com's coverage of the speech today delivered by the Fed chair at the Economic Club of New York. Now, we have some interesting takeaways here. My biggest takeaway is that Fed Chair Jerome Powell believes that inflation is still much too high and that the economy needs to slow even further in order to get the inflation rate back down to the Fed's mandated target of 2%. Now, Fed Chair Jerome Powell used the term resolute. I thought that was very interesting. He said the central bank would be quote unquote resolute in its commitment to its 2% mandate. Now, if we review what happened last week, we heard from the Bureau of Labor Statistics as they reported the CPI report that came in at 3.7%. So what does that tell you about the outlook of monetary policy? Well, to me, if we have inflation at 3.7% and we have the Federal Reserve Chairman coming out at the Economic Club of New York, essentially saying that we are going to be resolute in our commitment to the 2% mandate, well, that tells me we are probably going to be in this quantitative tightening cycle for much longer than the average market participant is anticipating. At least that's just my view, and that is my take. If you read the newsletter that came out last Thursday, we sort of talked about the different line items in the CPI report. And one of the most important, in my view, is shelter costs. So if we do a quick review, shelter makes up about 40% of the entire CPI number. And we're just starting to see 4 months in a row of decelerating inflation as it relates to shelter costs. So being that shelter makes up about 40% of the CPI, my bet is that shelter is going to continue to decelerate, and that should bring the overall inflation number, or the headline number, back down to the Fed's 2% target if we continue this trajectory, probably within a year. Now, we talked about the order of liquidity. Usually asset prices that are the most liquid, they are more sensitive to a higher interest rate environment. Therefore, they reprice in terms of their values at a much faster level. This is why we are just now seeing shelter costs come down in the valuations of not only rents, but values of single-family homes, duplexes, triplex, and even heading into the commercial real estate space, particularly office. I think this is a pretty appropriate segue to talk about another piece of economic data that was released today. If you turn your attention to the National Association of Realtors, since today is October 19th, they've released their existing home sales report for September. And as expected, if you've been tuning in to Walks in Wall Street, we've been talking about this for quite some time. One of our predictions is that the trajectory of sales volumes will continue to decelerate and decline. Well, that's exactly what happened in December, with existing home sales falling yet again 2% in December. Existing home sales slid 2% in September to a seasonally adjusted annual rate of 3.96 million. Sales retreated 15.4% year over year. So we have a month-over-month decrease of 2% and a year-over-year decrease of 15.4%. That is pretty aggressive slowdown in the housing market as it relates to sales transactions. So much is that if you look all the way back to October of 2010, existing home sales are now at its slowest pace since just after the financial crisis. So October of 2010. And that's honestly where the housing market put in a bottom and started to climb back out. But this makes sense, but we'll continue to go on. We're going to break down this existing home sales report line item by line item, as well as by geography. But before we get started, I'd like to point out one more thing. We need to talk about inventory. So inventory of unsold existing homes climbed by 2.7%. That was obviously from the prior month. So there's about 1.13 million homes for sale at the end of September. That's equivalent to about 3.4 months of supply at current sales pace. Usually what most economists say is, in order for the market, in terms of buyers and sellers, to be in balance, we're looking at about 6 months of supply for the market to technically be in balance. And we're only at 3.4 months. But the good news is we're starting to see that trajectory uptick in terms of more supply coming onto the market. So as a quick review, one of the main things we're seeing is sales transactions decelerating, and slowly but surely we're starting to see inventory come on the market and inventory sit on the market for a lot longer. Now, why could this be? Well, it's because prices need to adjust for the new interest rate environment. If you look at this time last year, the average 30-year fixed rate mortgage was sitting right around, I would say, 3 to 3.5%. Well, as of recording this live stream, according to bankrate.com and according to CNBC, the average 30-year fixed rate mortgage in the United States of America today hit 8%, which also makes sense, right? Because we had the US 10-year Treasury yield intraday hit 5%. So the bond market is going through all sorts of turmoil. There's tons of volatility in the bond market. The prices and the values of bonds continue to get hammered as rates spike across the yield curve. And that is obviously putting upward pressure on interest rates for home buyers. Last thing we're going to talk about tonight, team, before we get started is Tesla. Obviously, yesterday, Elon Musk's company reported earnings. This is the first year. Now get this. This is the first year and the first quarter for Tesla since July of 2019 that they missed on both the top and the bottom line. It's pretty substantial stuff. Tesla coming in at 66 cents worth of EPS. The vast majority of analysts on Wall Street were expecting 73 cents of EPS. So a pretty big miss on the bottom line there. If we turn over to revenue, they also missed on the top line, coming in at $23.35 billion for Tesla. Many analysts on Wall Street were expecting $24.1 billion worth of sales. So a pretty big miss, disappointing quarter, honestly. But the key metric that I look at as it relates to Tesla is always margins. This was Tesla's claim to fame, that they have high double-digit margins as opposed to a lot of the other auto OEMs on the street having mid-single-digit margins. Now get this, operating margin for Tesla this quarter comes in at 7.6%. I'll read that one more time for those of you who think I'm misquoting this. Operating margin came in at 7.6%. That is down year over year from 17.2%. Is this temporary? Are margins going to decelerate even further? Or is this a one-off and margins are going to expand? I don't know. We'll talk about it tonight. Also, they announced plans for a new manufacturing plant in Mexico, which is exciting. All right, team, I'm gonna go ahead and close up the laptop here. If you like that intro and you want to read a little bit more of my research, once again, for those of you who are new, if you scan the QR code on your screen and punch in your email, you'll be signed up to receive all of my equity research for free. Every other Thursday after the closing bell on Wall Street, I'm gonna send you out an email with a full research piece that is compiled by myself that covers the US equity markets, it covers fixed income, and it covers real estate, both national and what I'm seeing here on the ground floor in New York, with me dealing with commercial real estate and the highest upper echelons of the luxury real estate market. So please go ahead, scan the QR code, sign up for the newsletter. You do not want to miss our research. So I'm gonna go ahead and close up the computer. I'll say hello to everybody in the chat and we will get started. Happy Thursday to everybody. Okay, let's get started here. So we are having some technical difficulties with YouTube. So just please bear with us if the stream is a little bit buggy tonight. We are currently reporting live just outside of 432 Park Avenue, sort of Midtown East area. We are outside of Black Fox Coffee. It's a beautiful night. It's a bit chilly, not gonna lie. It is officially, I would say, the official full swing of fall. But here's what I want to do, everybody, and I think you are all going to be very excited for tonight's stream, because I think yesterday was the official opening day of Wegmans. So it is the first Wegmans grocery store to arrive here on the island of Manhattan, and we are going to be walking all the way down to Astor Place to check it out. All right, let me scroll to the top and say hello to the team here. I see Josie, what's up? Gregory Clark, Alfred is here, Bridget, everybody. I see D, Victoria Martinez, Noah, welcome. Sharon is here, says hey Tom and friends. Gary Carpenter, good to see you, sir. Thanks for joining us. DC322, Sally, Jafet Perez, Harry Connor. It's good to see everybody. Goldie, this is good Thursday evening. My good friend Colton Manning says, hope you're well. I am well. Right back at you. Hope you're well. John Casey says, good evening. And Western Mass Dave. Dave, how are you, my friend? Thank you for joining us tonight on this very brisk night in Manhattan. We are currently standing outside one of the most luxurious, and I would say iconic, hotels here in New York City. This is the St. Regis Hotel. The architecture is beautiful. It always gives off really good vibes. And right across the street, sort of like neighbors in this kitty corner here, is another ultra luxurious, ultra famous New York icon, and that is the Peninsula Hotel, right across the street from the St. Regis. Hey, Daryl from Chicago. Good to see you, Daryl. Hopefully you had a fantastic Thursday. I appreciate you tuning in. As always, oh my gosh, it's the one and only Andre Brown. Long time no see, my friend. It's an absolute joy and a pleasure to have you here.
Come east.
And there's a big police presence here, actually. Maybe there's some major politician or something's going on. Somebody in the chat last night was telling us that the former president's trial is going on now in Manhattan. I don't know about that. I haven't really been paying attention, but maybe that's why. Trump Tower is only a block away, so who knows? Cindy Foley's here. What's up? I know Jack S says the garbage is just stacked up against the car. That's a work in progress. The city's got to work on that. And Mayor Eric Adams has actually voiced his opinions, saying that we need to do something about all the garbage in New York City. Now, it's actually not too bad up here, though, to be honest. It's really bad in Koreatown, it's really bad in Chinatown, and it's probably the worst in Little Italy, unfortunately. And I think that's just because the streets are really narrow there, and there's a lot of restaurants, so they produce a lot of garbage. But I don't know what the solution is. I don't know. Because it does look a little bit weird when you walk around the city and you see these massive piles of garbage everywhere. Kind of sucks. Who knows? Hey, Tom Glass is here. Says really enjoy these streams. Thank you for doing them. Well, thank you for being here. I appreciate it. Jeff in Southern Tier, New York. What's up? Oh, says Trump left New York yesterday. Copy that. Soulfire 30. I don't know who that is. Wendy England. What's up? Good to see you. Unij 23. And I think I saw Evan Weeks here. Evan, good to see you. Thanks for tuning in. We're gonna head downtown. Yesterday was the grand opening, I believe, of Wegmans. I'm not sure if anybody here has heard of Wegmans. I think Jeff in Southern Tier, New York's probably heard of it. I believe the corporate headquarters is located in Rochester, New York, which is, I believe, the third biggest city in New York. Is that correct? I'm actually curious now. Could somebody Google that? I believe the three largest cities in New York, number one, New York City, obviously. Number two is Buffalo. Number three is Rochester? I don't know. Four is Syracuse? Something like that. Anyway, so we finally have a Wegmans in Manhattan. Really cool. Now, we do have Wegmans at the Brooklyn Navy Yard, but that is a little bit far away, not gonna lie. So if you're a Manhattanite, you live on the island of Manhattan, chances are you're not gonna go all the way out of your way to visit Brooklyn to go to Wegmans. I mean, maybe you will, who knows? But now you could just take a quick train ride on the 6 train down to Astor Place. You can check it out for yourself. Running at altitude says, it's New York, Buffalo, then Rochester. Copy that. Thank you, Running at Altitude. Colton Manning says, I saw some stuff about the opening day at Wegmans. Cool stuff. Yeah, I think it's a better Whole Foods, in my opinion. I think has more variety. I think the produce is better. It's a better Whole Foods, but a less expensive Whole Foods, I should say. And excuse us if the wind noise is really bad tonight. We do not have the microphone. I left it at home this morning and I couldn't go and get it, so I apologize. Looking across the street, you have one of my favorite churches in all of New York City. This is St. Thomas Church. Check that out. Beautiful. Architecture is amazing. Sharon's, this is like a Trader Joe's. I think it's a lot better than Trader Joe's, but it's a local grocery chain, I think native to New York, particularly in upstate New York, with its corporate headquarters being in Rochester. But I think it's gonna do fantastic in Manhattan. I mean, this is one of those companies to watch. Now, I know we're just talking about a grocery store here, but let me tell you, if they ever decided to go public, that would, I don't know anything about their financials, by the way. But usually if you have a good product and people are excited about a grocery store opening, yeah, they're probably making profits hand over fist. Now, I obviously can't, I don't know, right? But I think this is something to pay attention to. Now, it may be a little bit of a local piece of New York City news, but guess what? One of the most successful acquisitions in Amazon history has been Whole Foods, right? Whole Foods is a great acquisition. It's a very notable grocery chain. So there's a lot of money in the business. I don't know if Wegmans would ever even think about going public, I think it's still a family-owned local business. You never know. We'll pay attention to it. Hey, Barb says there's no doubt Wegmans will kick butt in Manhattan. Their financials are solid, and it's more than just a grocery store. I agree. I think they're going to do really well here. I'm not too sure about the location. I've never actually even been to the location of Brooklyn. I would assume it's doing well, but I mean, in Manhattan at that Astor Place location, it's probably going to be packed. I wouldn't be surprised if, you know, the lines are extremely long for that. Hey, Ann, says Tom, we have a Wegmans we have a Wegmans in Woodbridge, New Jersey. Copy that. I'm not a big Jersey guy. Very seldom do I go to New Jersey. Sunshine After Rain says Wegmans is like Target. It is not like Target in the slightest. All right, this is the Cartier store. This is one of my favorite facades in all of New York City, particularly around the holidays. Whatever about this store right here on East 52nd Street, Cartier, they have the most gorgeous holiday displays every single year without fail. I think it's even better than the Saks Fifth Avenue. It's just more classic. They usually have their famous Jaguar on the side. You know what, Spencer? I don't think we do have a Kroger here. I don't think so. I don't think there's any Krogers on the East Coast. At least not in the New York metropolitan area. I don't know. Tim says several Wegmans in Maryland. Tim, what are your thoughts? Oh, guys, real quick. We have to do a quick update. So this, I'm just learning this myself. This is now an Eden Fine Art Gallery, and guess what this used to be? This used to be Versace's flagship location in Manhattan that unfortunately, since the rents were so ridiculously high on Fifth Avenue, they had to relocate to Madison. So the flagship Versace store is now an Eden Fine Art Gallery. So there's a location in Soho, there's a location right behind what's it called? The St. Patrick's Cathedral. And if you remember from our Miami live streams, there's also one in South Beach. Anybody remember that? You could even still see they have the, if you look at the letters right on the awnings there, it still says Versace. They forgot to take it down. But yeah, this used to be the 4-floor flagship of Versace. Now it looks like they have a pop-up art gallery for Eden Fine Art. And they actually look like they're just setting things up. So maybe this is like an exclusive. Maybe it didn't even open. Cool. What do you guys think? Thumbs up, thumbs down? I mean, the space is gorgeous. I mean, we can't deny that. I mean, look at the craftsmanship on the floor. So I think the art gallery suits it well. Noah says, Tom, what's your go-to supermarket? I mean, I'd never really go to Wegmans, but I think now it'll probably be my go-to supermarket here. Now, not for nothing, I will say this, because Walmart is going to report corporate earnings. Who else, and let me know in the chat if you agree, disagree, or whatnot, but I'm gonna say something that may be a little bit controversial here, team. Over the years, Walmart has impressed me beyond belief with their Walmart supercenters. I remember when they first came out with the Walmart supercenters where they had full grocery, full produce. It was really bad. The quality of the food was absolutely piss poor, excuse my language. But now it's actually really good. Whenever I'm back in Miami, I tend to cook a lot because I have a house there. In New York, it's very hard to cook in your apartment because everything is a shoebox and you're always running and gunning all the time. But that's where I go grocery shopping when I'm in Miami. The Walmart supercenters, they have great produce. Yeah, I'm pleasantly surprised by it. Any thoughts on that? You guys agree, disagree? Someone says Walmart grocery is terrible. Well, at least the one that by me, in Sunny Isles Beach. Well, it's not in Sunny Isles Beach. It's close. It's good. I don't know. All right, everybody, this is the Olympic Tower. I always like pointing it out. We do have a lot of new people here. So Olympic Tower is actually a very iconic building in New York City for a very interesting reason. Now, it sits at 641 Fifth Avenue. And this was one of the first major condominium developments that serviced the luxury sector for foreign buyers. Because in New York, right, if you think about old original New York, the number one thing you think about is, ew, nobody wants to live in Midtown Manhattan. That's where all the office workers are. We want to live on the Upper East Side. We want to live on the Upper West Side in a lot of the cooperatives. So a little bit of New York City real estate history here. Essentially what happened throughout the years is, even if you were a wealthy foreigner, right, from Italy or from wherever, any country you want to pick, even if you had millions and if not billions of dollars, in some circumstances, the co-op boards were so strict that they would not allow foreigners to purchase in their co-ops. So developers sort of noticed this and they found an edge in the marketplace, and they started to develop luxury condos in Midtown Manhattan geared towards foreign buyers, right? Because with a condo, there's no sort of board that has to approve your application and say, hey, you can't buy here, you can buy here. A lot of people don't know this, but in a cooperative in New York City, they can deny you for any reason and they don't have to tell you why, which is kind of crazy. So Olympic Tower, so 641 Fifth Avenue, was one of the first major luxury condos in the city, and the vast majority of purchasers here were foreigners. Now, this building has amazing views of both Midtown Manhattan and Central Park, mainly because it's right next door to St. Patrick's Cathedral. And guess what? St. Patrick's Cathedral sits very, very low to the ground, and it's not going anywhere. Okay, a developer is not going to come here and knock down St. Patrick's Cathedral and build a super tall tower. It's just not going to happen. That will be there for hundreds and hundreds and hundreds of years. So your Midtown Manhattan views of the Empire State Building, 30 Rockefeller Center, 1 Vanderbilt, the Chrysler Building, and all the way down to the World Trade Center, those views are protected pretty much forever. So it's an interesting building. I always like to call it out. Speaking of Rockefeller Center, here we are. We are standing right outside Saks Fifth Avenue, and this is 30 Rock right in front of us. And they're building the ice skating rink already. Hey, DC 322 says get a house instead of a condo. My relative is about to move out of a condo very soon. I mean, easier said than done in a city like New York, right? You know, try buying a full townhouse in New York City. It's going to be like 16 million bucks, depending on where you are, upwards of 50 million bucks. So, you know, in Manhattan, it's a lot easier said than done, for sure. The vast majority of people who buy in Manhattan either buy in co-ops or condos. But yeah, well, you know, down in Miami, I opted to buy, you know, not in a condo. I bought a home for many, many, many reasons, but many reasons. All right, let's continue to head down 5th, and we will be able to see the Diamond District today. Hey, Go for Hokies says, I love Target, but they are going to have to do something about their grocery prices. Well, I think a lot of those type of stores are in trouble due to retail theft. There's been so much retail theft that's been circulating across the country, particularly in New York City, that Target's actually closing down multiple locations. There's a notable Target location on 116th Street in East Harlem. It's gone, it's closing down. There's been so much theft. They've been relentlessly just ravaging that store for months on end that Target's like, look, this can't go on any longer. So now the community has no store. So good job, guys, for that. So they're gonna have to figure out I mean, look, that's a serious problem. And here's why it's such a bad issue. I'll explain why. If you look at the culprits, the derelicts, the scumbags who are stealing and shoplifting from these stores, it is a very, very, very small portion of the population, an extremely small portion, that do the vast majority of the crime. So all of the normal people that are living in these neighborhoods, now they have no services, right? Now they have no store. Now they have to travel, you know, a mile or two to get anything. So the city is doing, you know, these neighborhoods a huge disservice by not enforcing the law, right? So in those neighborhoods of East Harlem, if you look at the, you know, average incomes relative to other parts of Manhattan, it's a little bit lower, right? Hardworking, really good people. And these organized crime, shoplifter criminals are essentially destroying their community. Right now, the community of East Harlem doesn't have a Target to go to. They have to go somewhere else. So the city needs to do a better job of that, right? And it's not just Target, it's Rite Aid, who just filed for bankruptcy. It's essentially a lot of the big box retailers, right? Organized retail theft has been a really, really, really bad, I would say, thorn in the side of a lot of communities here. Not just impacting corporate earnings, right? This channel is called Walks in Wall Street, but there's also other ramifications than just financial. Because Target's going to be fine, okay? They're going to continue to make billions of dollars. It's the hardworking, normal, lower middle class and middle class people that are going to be punished, right? That have all their stores shutter, that have all of their pharmacies shutter in their neighborhoods because of a select few individuals. So, there you go. All right, everybody, this is East 46th Street and 5th. We're coming up on the Empire State Building. Well, actually we're not, but we're coming up where you could see the spire of the Empire State Building in front of us. The Empire State Building's on 34th Street. We're on 46th. So we have a little bit of a ways to go, but ultimately we are going to go to Wegmans tonight. Hey, Juan Fernandez, good to see you. Thanks for joining us. I see LA0070. Welcome. Western Mass Dave says, Tom, I dealt with organized theft in my job. They get caught, go to jail for a short time, and then released. So wash, rinse, and repeat. Yeah, it's sad, right? And the same thing is going on in San Francisco. And I think, you know, not to sound like a broken record, but a lot of people need to understand this. It is a very, very, and the NYPD will even release these statistics. They're repeat offenders that do huge amounts of crime. It's like a group of 200 people that are organized retail criminals that destroy the community for everybody else. That's a very simple fix. Go out, headhunt those 200 people, problem solved. You're done. But there you go. The LT Prods stores have cut a lot in loss prevention in the last 3 decades. So they don't want to spend the money to put it back. Interesting. I didn't know that, actually. I didn't know that stores are cutting spend on loss prevention. If anything, I would think they would increase it. So that's interesting, the LT Prod. I never knew that. Hey, Herb is here. Hey, Tom from Missouri. Hey, Herb. Thanks for joining us. Welcome to Manhattan. All right, everybody. I think that was good to talk about. Obviously, as we roll through earnings season, we're going to hear from all of these companies, and maybe we'll get a little bit of an update on that, retail theft. John says, pickleball, anybody? Not a big pickleball guy, but I did play tennis back in my day. I'm not sure if you guys knew that. Do we have any tennis players in the chat? I don't know. I enjoyed tennis. I like it, but I haven't played in a long time. I was watching a Bloomberg segment on why pickleball has become so popular, and it really has to do with the low impact of the sport. So tennis is very high impact. If anybody's ever played tennis, it's very, very hard on your knees, particularly if you've played, in high school or college, the stopping and going all the time. So by having a shorter, court, if you will, it's low impact. So it applies to not only younger millennials, but older people too. Somebody says, do you guys remember the photos of Trump playing tennis? I do. Those were hilarious. The amount of memes that were made out of those photos, unbelievable. Unbelievable memes. Hey, Traderholic says, hey Tom, do you think oil will hit $100 soon? I don't. I'm gonna go against the grain here, and I'm gonna say I don't think so. Now, I could be wrong. I'm wrong a lot, but I really don't think so, in my view. Which is a good segue, because we need to talk about the Federal Reserve. And the Federal Reserve actually spoke about crude oil today in his speech. So everybody, there's some not really breaking news, but a major event happened here in New York City at the Economic Club of New York. Federal Reserve Chairman Jerome Powell, he gave his speech, and to use his words, he used the terminology resolute. He said, we are going to continue to be resolute in bringing down inflation to our 2% mandated target. So what does that say for all of these economists, analysts on Wall Street? Oh, is this road closed? Oh, I think it is. It looks like they're building brand new condos. Sorry, I'm totally distracted. I'm tired tonight. But these windows look like the windows at 130 William, don't they? For all of those who remember our 130 William tour. Very similar architecture on the outside, actually. Anyway, so Fed Chair Jerome Powell says he is resolute in his goal of bringing inflation back down to the 2% target. So what does that mean for all of the economists and analysts on Wall Street that believe the Fed is going to pivot immediately and start cutting interest rates by Q1 of 2024? Well, I think they're wrong. I mean, Goldman Sachs, one of the top economists at Goldman Sachs, came out about 2 months ago and says he is pricing in rate cuts by Q1 of 2024. Guys, that's in 2 months. Okay, let's be real. It's already almost November, right? Which is crazy to think about, but it's true. You really think the Federal Reserve is going to start to cut interest rates in 3 months, 2 months? I mean, maybe, right? Anything is possible. This world is absolutely crazy beyond belief. So nothing would surprise me, but I don't think so. I think there's a very, very slim chance that happens. Last week, as we stand on the corner of 5th Avenue and 42nd Street, last week we heard from the Bureau of Labor Statistics as they reported their CPI report, which is the inflation number, and inflation came in at 3.7%. 3.7% is not 2%. So from what I heard today at Fed Chair Jerome Powell's speech at the New York Economic Club is that we're not even going to think about cutting until that number says 2%. So I don't know. What do you guys think? Any thoughts, any high-level thoughts on the speech today? In the distance, you could see the Chrysler Building, and you could also see One Vanderbilt. This is looking all the way down to Grand Central Station as well as Pershing Square. Hey, CPI 2 says interest cuts means recession, economy still strong. JC says war makes the money printer go burr. You know, not to get too political, but You know what I thought was very, very dystopian and disturbing in nature? Janet Yellen was asked by a reporter if the United States can afford to fund 2 wars. And immediately she was like, oh, absolutely, we can totally afford 2 wars. Let's go, let's do it. Like, you kind of have to be more sympathetic in your answer, right? That came across to me like everybody is gung-ho to just feed the war machine. You kind of have to, you know, placate your answer a little bit, not just to say, oh yeah, US is ready to go, we're ready to print so much money and use taxpayer dollars to fight so many wars around the country, right? So you know, I don't care what, you know, your viewpoints are on either or, but you kind of got to be a little bit more, you know, let's just say choice of words with your answer. That just seems like you're eager to funnel a war machine, which is kind of weird. At least to me, it came off a little bit weird, but. Yeah, Sherry says, Tom, have you seen the military defense stocks? Yeah, like Lockheed Martin, Raytheon. I think all those had a pretty big bid after the, you know, horrible terrorist attacks that's going on in the Middle East. Yeah, you know, oil, I think after the first initial counteroffensive into select parts of Gaza, Saudi Arabia came out and said that they are going to cut oil production if these airstrikes can continue. And I think crude oil rallied 8% on the day alone. All right, so we are looking at the Stephen Schwarzman building. This is the original New York Public Library that sits right here on 5th Avenue. And in the distance, we could see the Bank of America Tower. Bank of America reported earnings this week. We did a deep dive into Bank of America's earnings 2 streams ago. I see Ren1018 in the chat. What's up, Ren1018? So let's talk about interest rates right now. Since we, you know, went over and sort of discussed what was said at the Fed meeting today. Well, not the Fed meeting, the Fed speech. Let's try to get away from this guy for a moment. All right, so judging based upon the fact that Fed chair said we are going to be resolute in raising interest, or not in raising interest rates, in getting inflation back down to that 2% target, it leads me to believe that interest rates are going to continue to rise. Now, the bond market had a reaction today from that verbiage. Did anybody watch the 10-year yield today? For a very brief time intraday, the 10-year yield hit 5%. I think right now it's like 4.99%, but it's pretty much 5%. That's a big deal. That's a very, very big deal. The volatility in the debt market has been really breathtaking. That usually happens in sovereign bonds in other countries, not in the United States. So the bond market sell-off is very much still in play. TLT got crushed today, which is the long duration 20-year bond ETF. And if you think about what it means when the 10-year US Treasury yield is increasing, well, we have to look at a lot of the other products that are priced via spreads above the 10-year, such as the very famous 30-year fixed rate mortgage, which is probably one of the most popular products in the United States. So for the first time in over a decade, the 30-year fixed rate mortgage is now above 8%. I should say right at 8%. If I had to make a prediction, I think by the end of the year, so by December 31st, I think you're going to be seeing a 30-year fixed in the United States of about 8.25. I think rates are going to go up and rally throughout the year, going in to the very end of the year, which I think is going to put further pressure on the housing market. Carlos's central banks need to be abolished. Yeah, I mean, we could have that debate forever until the cows come home. I think you're correct. If you want to sort of read a little of my research that I put out just for all the new people in here, last week on Thursday afternoon after the bell, I put out a research report to all of the Walks on Wall Street subscribers, talking about interest rates in its reaction to housing, particularly shelter costs, and a few predictions about what we think are going to happen. If you scan the QR code on your screen as you're looking at the beautiful Empire State Building, and if you punch in your email, you'll be signed up to our Substack for free, where every other Thursday after the market closes, I will send you all of my equity research that includes an outlook on the global equity markets, fixed income, and real estate. And it's a great free way to support the stream. So next Thursday, the newsletter is going to be doing a deep dive into bank earnings. We are also going to be talking about the existing home sales report that dropped today by the National Association of Realtors. And then we are going to be doing a deep dive into the Chinese commercial paper market. Okay, we're going to lay out a very interesting thesis as it relates to the Chinese commercial paper market. So you do not want to miss that. Go ahead, scan the QR code and sign up for free. Ukrainian Royal says, hey Tom, I've got some research project I have to work on. Can't stay here long. I hope that you're doing well and you have a great weekend. Hey, Ukrainian Royal, thank you so much for your generosity and kindness. I appreciate it. And I wish you the very best with your research project. Thanks so much for watching. Hope it goes well in whatever you're looking to do. Hey, Carl Roth is here from Canada. What's up, Carl? Carl, what's the temperature looking like in your neck of the woods in Canada? Are we looking at 30s at night now or what? New York, we're getting down into the low 50s. D, what's up? Hey, BS Vlog, welcome, good to see you. Sherry says, Tom, I really enjoyed reading your research. Thank you. I appreciate that. So what I'm looking to do, and I'm going to be doing some beta testing with this, but I think long term, I want to build out a true equity research company, like an actual full service equity research company. So as I build the business in the real estate sector, I want to take all of those profits to headhunt and hire analysts from top investment banks to work for me or my company and put out dedicated equity research that we sell. Well, not sell. I don't want to give away the business plan because I think it's an ingenious business model. But anyway, yeah, that's the goal. So I want to recruit top talent from across the street instead of them working 90 hours a week for an investment bank. I think they could have a more lucrative opportunity by going direct to market on an ads only basis and putting out bi-weekly research on select sectors. So we'll see. You guys can watch the company grow in real time. Hey, Tandid Studios. This is what happened to the apartment tours. We have one coming out tomorrow at 5 p.m. I was just in Miami, so I couldn't do any. But we have another one coming out tomorrow at 5 p.m. And I'm filming 2 more tomorrow. And I'll be in New York probably till the end of the month. Probably till November 1st, and I have to go back for a brief stint yet again. Man, that Uber driver nearly nicked that guy crossing the street. People need to have a little bit more patience. I think that's the lesson for today. Everybody needs to have a little bit more patience with one another. I think particularly in the world that we live in now, with all that's going on, let's have a little bit more sympathy and a little bit more patience. That's what I'm going to try to do. Hey, Daniel G from Buenos Aires, Argentina. Good to see you. Hope things are well with you in Argentina. Thanks so much for joining us today in Manhattan. Hey, Dan Zanks. Tom, do you remember years ago when we used to see the news bank? Ooh, I do unfortunately remember that. Yeah. Look, it's a tough gig, man. It's hard. It's hard. It's very, very demanding. But Dan Sang, any initial thoughts from the existing home sales report today, or Fed Chair Jerome Powell's speech? What do you think? Are you in the higher for longer camp or what? This is an amazing shot of the Empire State Building. I love how they have the classic color scheme, the very bright white. You know, we might as well actually walk over. Well, maybe we'll walk down and over since we have the light. This will take us to 32nd Street, Korea Way. Photos from around New York, what's up? Good to see you photos. I see Robert is here too. Robert, thanks for joining. Hope you're well. Now, in the basement of the Empire State Building, you have one of these Starbucks Reserve Roasteries. This is one of the flagship locations, and if you look at the second floor, I'm not sure how well this comes out on camera, but there's actually a bar here where they serve alcohol. So Starbucks, they serve alcoholic infused coffee beverages right here. I've never been to the second floor, but I've been in here. I've got coffee in here once. It's very expensive, but you know, every once in a while, I guess it's nice to kind of go in and hang out. From all of the Rangers jerseys, it appears that there was a Rangers game tonight. Here you have a beautiful shot of one Vanderbilt here. Hey, the LT Prod says, I would like to open a business intel firm. That's interesting. Very interesting. Diane says, NPR today ran that older homeowners want to downsize, but won't because of replacement housing costs. That's, you know what, Diane? I'd really like to read that article. Could you put that in the chat? Oh, really? Chip Hunter says Nashville 4, Rangers 1. Well, that sucks. Well, I guess it sucks depending on who you're rooting for. I'd like to go to a Rangers game. I think I told you guys this before. I've never been to a hockey game at Madison Square Garden. Not once. I think you have to do it at least once. And I believe Rangers tickets are the most expensive tickets out of all of the New York sports teams, I think. So out of the Knicks, the Nets, the Giants, Yankees, I believe hockey is the most expensive. Is that correct? Well, you know, we'll sort of go into the existing home sales report today, just because Diane gave us a very good segue. So everybody, today, October 19th, 2023, the National Association of Realtors released their existing home sales report for September. And as expected, yet again, we had steep deceleration in transaction activity. So on a month-over-month basis, existing home sales fell 2%. On a year-over-year basis, existing home sales fell 15.2%. very, very steep declines, but it kind of makes sense. However, let's take a look at median transaction price. So the median sales price across the country actually went up year over year, 2.8% to $394,300. Now, the National Association of Realtors existing home sales report is what I use all the time as one of my preferred leading economic indicators to give us a little bit of a foresight on what's going to happen in the residential housing market for a couple reasons. And we've explained this many times, but it's important to get a grasp on this because I think there's going to be a lot of good opportunity coming. When you transition, or in a transitionary period, from a quantitative easing monetary policy to quantitative tightening, essentially in layman's terms, what happens is the cost of money, so the price of money, gets more expensive, which prices a lot of people out of the housing market. I never understand why those rickshaw guys blare the music like that. But it prices a lot of people out of the housing market. And there's a couple key data points that I look at within the report. Particularly what you want to look at is the percentage of home buyers that month that were first-time home buyers, and the percentage of home buyers that pay in all cash. And there's always not an exact one-to-one correlation, but there is a pretty noticeable and very, very strong correlation between the percentage of sales that are made in all cash and the percentage of sales that are first-time home buyers. So according to the existing home sales report that dropped today, the percentage of all cash transactions for the month of September was 29%. So 29% of all homes that were sold, not new homes, but existing homes, 29% all cash deals. Now, what do you think that means for the percentage of those transactions that were first-time home buyers? Probably pretty low, right? If you guessed pretty low, you would be right. Now, does anybody want to guess? I think this will be fun to guess. The percentage of existing homes that were sold in September that were bought by first-time home buyers. Does anybody want to take a guess? As we look at the flagship Macy's here at Herald Square, before you know it, they're going to be putting up the holiday decorations of the Macy's holiday windows. Roberts is 25%. That's actually a really good guess. That's a phenomenal guess, Robert. T. Callis is 10. Richard Vogels is 20. Hey, Soho Joe, what's up? Good to see you. Well, the percentage was 27%. And now that number really doesn't mean much unless you have something to compare it to, right? So I think it's important that we compare it to something. Well, the average percentage of existing home sales that should be first-time home buyers is around 40%. 40%. So that's a little bit concerning for me, but I think it's all going to play out in the end, because as we talked about, chances are first-time home buyers, right, speaking in generalities here, they don't have a ton of money to be able to slam down $350,000 to buy a house in cash, or $600,000 to buy a home in cash. So what I believe is that you're going to see transaction volumes continuing to decline, and then finally you're going to see valuations start to come down, and you're already starting to see valuations come down and soften. Here in New York City, you're seeing it in the rental market, you're seeing it in single-family homes across the Midwest, the West, and the South, particularly places like Florida. So I think the opportunity is coming, but again, as we talked about, in order of liquidity, since real estate is relatively illiquid, it takes a little bit longer for the full effects of interest rate hikes to impact those valuations. The last data point that we could talk about from the existing home sales report that's very important to pay attention to is inventory, right? Keep it simple. Go back to Economics 101. It's all supply and demand. And what we've been dealing with now is extremely, extremely low historical demand. That's why prices have been staying elevated. However, this month, for the third straight month, inventory actually ticked up. So inventory ticked up 2.7% month over month to about 1.13 million homes for sale, or about 3.4 months worth of supply. Here's the thing. You may be saying, oh, wow, 3.4 months worth of supply. This is great. And we got a long way to go. We have a long way to go, and I'll tell you why. Economists generally agree. So the consensus among the best and brightest economists from all of the great U.S. institutions, our colleges, universities, major investment banks, consulting firms, they say that for the market to be in balance, right? So for buyers and sellers to be in balance, it takes about 6 months worth of supply. We're at 3.4 months. So the market may stay a little bit tough until late Q1, early Q2 of 2024. That's what I'm thinking. That's sort of my viewpoint. What do you guys think? Thoughts there? Are you seeing the housing market start to soften in your neighborhood? Are you starting to see prices come down? Are you starting to see real estate sit on the market for longer than normal? Let us know in the chat. But look at this amazing view of the Empire State Building. This is gorgeous. Stunning view. Hey, Brad's Brain says they're starting to discount new homes in Houston. Prices are coming down, but the rates still make it a bad proposition. To me, I'm renting another year in January. Yeah, it makes sense, right? I mean, the numbers have to work. And to Brad's point, prices need to adjust for a new interest rate environment. Hey, Tios is seeing houses sit longer here in Tampa, Florida. Thank you for that, Theo. Hopefully you're well. And let me know once you get finished with that book. I'd love to know your thoughts. I always like to hear other perspectives on books I've read. RPT says commissions are about to be hit. I don't think about it like that. I actually think overall commissions will increase significantly over the next couple of years, right? Because now nobody's making any money because there's no deals. Right? If there's no deals, there's no transaction volume, there's no commissions. So once the market reprices and sellers, start to come to terms with reality and say, okay, if we want to get a deal done, let's be fair on all parties, let's price our properties efficiently, then transactions will start flowing, the market will start to pick up, and commissions will start to flow again. Hey, hang with Mark Mom says, Tom, even if the offer gets accepted, financing is the next step of concern for first-time buyers. Absolutely. That's such a good point, hang with Mark Mom. And to your point, banks right now, not only are they, an average 30-year fixed-rate mortgage is 8%, but the lending standards are getting increasingly stronger, right? Or I should say they're being more strict with their lending standards, particularly if you're about to go into a recession. You want to make sure you don't have a lot of bad debt. So you're 100% correct. Hey, Teresa Diaz, what's up? Sabrina Fair, welcome. Wendy England says, Tom, house around the corner, 2 weeks, then sold. All the townhome developments are sold out while in construction. What part of, I think you're in Canada, right? Hey, Juan Fernandez, does Tom ever read Mastering Market Cycles by Howard Marks? I have, it's a great book. Madison 32, so Central Jersey is slowing down, not many listings. JC says, Tom, random question, but do you play chess? I do play chess. I like chess a lot. All right, let's continue to head down because we have to make our way to Wegmans. If you're enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these live streams around 5 days a week, starting at 8:30. Oh, no way, Brad's brain. Did we really? I'm gonna have to look at my Twitter when I get home. I'll check my Twitter DMs. Man, the only thing about 34th Street, it's just so chaotic. I don't know if I could ever live directly on 34th Street. I think I need a little bit of peace and quiet. That's why I like the Upper West Side of Manhattan. All the way in the distance, you could see the World Trade Center. That's almost a near perfect view as well. It's so clear out tonight. You can see all the way down to the Freedom Tower, the Trade Center. This is another unique view of the Empire State Building here. Hey, Vanquish is 432 Park Avenue. Well, that's where we started the live stream. We always tend to start the live stream by 432 Park because my office is right next door. Oh, actually, never mind. I have to wait for that. I think that's a Lucid Motors right here. All right, now we're turning on to 32nd Street, Korea Way. This is where you can get the PATH train all the way out to New Jersey. So we're on Broadway. It's probably going to get a little bit quieter here. And we are going to be walking all the way to Astor Place, which is very close to St. Mark's. Now, if you saw the live stream I did earlier today, we walked around Stuytown. What did you guys think of Stuytown? Good, bad, ugly? What do you think? I think it's an interesting neighborhood. Yeah, the LT Prods is Lucid plummeted 29% today on a miss. It seems like all the EV companies are taking it on the chin. I mean, Tesla had just an absolutely egregious earnings report. Really, really bad. I mean, their profit margins, I should say operating margin, I mean, just completely obliterated. And Elon Musk gave some less than optimistic outlooks on the economy too. He says, look, the way interest rates are, nobody's gonna be able to afford a vehicle because the vast majority of people need financing for those vehicles. And guess what? That's one of the reasons why Elon Musk is slashing prices. How many times has Elon slashed prices of the Model Y this year? I think 3 or 4 times.
Yeah.
Which, to be fair, is getting a lot of people upset. Because, I mean, imagine if you purchased, you know, your Tesla in 2021, just before all these price cuts. People are pissed. People are pissed. I agree. Juan Fernandez, I think 4 times. The LT prods, as Musk seemed a little bit nervous for the first time. I got that sense too. And you never really get that sense of nerves from Elon Musk. You always have this very big personality from him. I was about to use the word combative, but I don't think that's a good descriptive word. The only reason why I was about to use the word combative is because if you've listened to any of the earnings calls, you know, sometimes he's quite dismissive of analysts. You know, we'll say, hey, dude, this question is just like so boring and so dry. You know, let's get some questions from YouTube or Reddit. And, you know, this time was more of just a very sort of like a meek outlook on the economy. I mean, I don't know, maybe he was just down about the quarter, but I think the only bright spot, I guess for me, from the quarter is that we're gonna get the Cybertruck. That's good news. So we have the Cybertruck coming, and then we also have a brand new factory in Mexico that's coming as well. But the thing is, Cybertruck's probably not gonna be profitable for quite some time until they could ramp up production. And to use Elon Musk's terminology, sort of paraphrase, he said it's going to be a significant amount of work that goes into that. Robert says the Cybertruck is as ugly as sin. I think you have to have a very acquired taste for it. I think it's kind of cool. Now, you guys know, my Tesla is the Model X. I think that is the coolest car on record. Would I pay $100,000 for it? No. No, probably not, no. But when I go to buy it in 3 years, it's probably not gonna be $100,000. Yeah, hang with Mark, Mom, you're right. Not combative, more defensive. I think that's a better descriptive term. I think you're right. He seemed very defensive on the call. Now, this is just a gorgeous building right here. And in the backdrop, you have an incredible view of the Empire State Building. Really, really stunning. Hey, DC322 says I need my Ford Falcon Interceptor, last of the V8s. Juan Fernandez says I have a Model 3 right now. Plan on giving it to my daughter for her first car and then buying an X. That's a good plan, man. And I'm sure your daughter is going to be absolutely thrilled about that. Man, imagine having your first car be a Tesla. Now that's cool. That is cool. So on the corner of West 28th Street and Broadway, this is the new Ritz-Carlton Hotel and Residences. It's actually really nice inside. I was inside here the other day. We'll cross by the ice cream shop here. But if you look at a daily, a weekly, and a monthly chart of Tesla, we are now trading not only below the 50-day, but below the 100-day and below the 200-day moving average on Tesla. It does not look good. It looks very, very ugly. And it looks like we could break down here pretty significantly, which is a cause for concern because the vast majority of people, right, are all, you know, they index their money in the S&P 500. And as we've talked about, the S&P 500 is a market capitalization weighted index, right? So it's weighted by market cap. So the bigger the market cap, the more weighting the company. So if you start to have Apple rollover and Tesla rollover, I mean, you can see significant drawdowns in the S&P. Sam M says clanging and banging, absolutely. Sharon says my first car is the Model 3. Very nice. Very, very nice. Now, when you get your banking job in New York, are you gonna bring that car to New York? I don't know where you would park it though. Parking's about $350 a month. It's pretty significant. T-Cal says my first car was a 72 Volkswagen Bug. I'm down with that. I like that. Now this is an ice cream bar, a liquor infused ice cream bar. Very, very cool. I mean, Broadway has changed so much, particularly since the pandemic. In the pandemic, not even gonna lie, every single one of these retail storefronts was totally vacant. You can go back and watch some of our live streams there, totally vacant. Now they've actually transformed it really, really nicely. And everything is filled with the store. There's restaurants, there's coffee shops. There's just all sorts of things to do. And the city closed the street to vehicle traffic. As you can see, it's all outdoor dining. There's dedicated bike lanes now. So it's actually pretty good. It's really nice. Lilith says my first car was a 77 Olds. What is an Olds? An Oldsmobile? I'm trying to envision what that looks like. Now, I think Warren Buffett still has one of the original Cadillacs. Isn't it like a 2005 Cadillac or something like that? And he refuses to upgrade his car. Hey, John is here. What's up, John? Dusty Cole, God bless, thank you so much. Peter Webley says, Tom, you should take a trip across America and see the real economy. You'll be shocked if I have time. Peter Webley says, Manhattan is not the city. Most New Yorkers don't live there and they are struggling financially. Sharon says, nope, I wouldn't plan on taking the car to New York City. It'd be very expensive. Yeah, I mean, if you want to buy a parking spot in Manhattan, they start at $175,000. The monthly taxes, I don't know what I'm doing here. I'm going to cross the street. The monthly taxes are $310 a month, and the common charges are $75. That's your overhead, right? So if you want to buy your own space in a private garage, starts at $175,000. Taxes are about $310, and the common charges are $75. We're actually selling about 4 of them on the Upper East Side. And yeah, if you're looking to buy a parking spot, let me know. We sold one. Well, since we've taken over the project, we've sold one. And during the pandemic, those spaces were going for $300,000. Can you believe that? Which makes sense, because everybody was so freaked out during the pandemic. They thought, oh my gosh, if I take the subway, I'm going to get coronavirus and die. Well, without getting political, we all know what the turn of events with that was. So people were dropping $300K cash. I'll buy a private parking space. Those spots are going for $175 now. I know many of you around the country who are not from Manhattan, you're like, $175,000 for a parking space? That's crazy. It's actually a really good deal. It's actually a very good deal. 175 grand for a parking space in Manhattan. Peter Webley says, do you have any listings in the East Village? Unfortunately, no, but look, I'm fighting for every listing I can get. I have an amazing new listing coming out in Tribeca, which I'm extremely excited about, because to have a listing in Tribeca is like insane. It's off market. I haven't listed it yet. It's 3 bedrooms, 3.5 bathrooms in an amazing building. The building is 5 Franklin Place. It's one of the only new developments in Tribeca that has in-unit parking garage. I mean, it's literally like you're kind of, it's just an insane place. When I list it, I'll do a video tour and show you guys. But you pull into the parking garage and it's sort of like Batman. And then it goes down about 2 stories and you have your car in safekeeping in the basement of the building. It is really, really cool. And I can't say who, but one of the most famous New York Rangers in Ranger history lives in the penthouse, just 2 floors above my listing. So if you want to live near New York Ranger, this is your place. This is your place, pal. Sharon says, I used to watch. Yeah, he's a very good friend of ours on $1 Million Listing. Yeah, so he works at the same brokerage I do, Douglas Elliman, and Kirsten Jordan was also a cast member on $1 Million Listing New York and did a lot of business with Frederick. We still do a lot of business with his team, a lot. And that's who I work for. I work for Kirsten Jordan and her husband. All right, I think we gotta pick up the pace here a little bit because we are nowhere near the Wegmans. So I gotta start to turn the burners on a little bit. The LT Prods, Tom, do you have a real estate license in Florida and do you plan on getting one? Yeah, we have some major expansion plans. That's sort of one of the reasons why I joined the team. My pitch was we need to build out a big Florida arm and also a development arm down in Florida. So that's why I've been back and forth so much. In Q1, we plan to open up our office. So here at the Kirsten Jordan team, obviously we are based here in New York City. We plan to expand sales operations to South Florida, and I will be leading up those sales operations down there. So stay tuned, early Q1, hopefully. We will have our office open up in Mid Beach. So we'll see. Hey, Janice S says, I love $1 Million Listing New York. Yeah, so the show is not... So this $1 Million Listing New York, they canceled the show due to COVID. But... Nah, I can't say but. I'll edit that out. Edit that out. Don't just... Yeah, that's it. They canceled the show. Nothing's going to happen. It's not coming back. There's not going to be a big resurgence. It's not going to be super exciting. Just ignore all that. All right, so we are now in the Flatiron District. And check this out. Unfortunately, it is covered in scaffolding here. But they are going to turn this into hotels and condos. But I don't know, guys. I think the Flatiron building is so narrow that the floor plans of the condos may be a little bit too wonky. Like, I don't even know how you would structure that, so who knows? Because if you go on Google Images, just to have a better visual since it's so dark, pull up a picture of the Flatiron building. It's just too narrow. So I don't know how you would do the conversion to condominiums. The developers would have to get very crafty with that. I just can't envision having apartments in there. I feel like the walls would be like the bedrooms would be too narrow. The square footage would be too small for the individual units. I don't know. Maybe they'll surprise us. Maybe it'll be really nice. Brad's brain says it would still be amazing to say I live in the Flatiron building. That's true. That would be like a major flex. Hey, by the way, where do you live? Oh yeah, I live in the Flatiron building. No big deal. You know, I just live in one of the most iconic buildings in the world. It's just, yeah, it's no big deal. Don't worry. I mean, we'll see. I don't know when the completion date is, but it appears to me that work is, I mean, if it hasn't started already. All right, however, we do have some bad news. And the bad news is the following. You see this? This used to be the most iconic view of the Empire State Building anywhere in New York City. Unfortunately, this big building that is now being erected is blocking the entire Empire State Building, so you really can't see it anymore. which is kind of a bummer. So if you stand right here on the corner of Broadway and East 23rd Street, you used to be able to, you know, get a burger at the Shake Shack, get a coffee at a neighboring coffee shop, sit down right here on one of these tables, and turn around and see an unobstructed view of the Empire State Building. But no longer. Kind of a bummer. So, Rita M says, I'm not trying to be rude or racist. All right, I'm not even gonna read that comment. I don't want to get in trouble. JC says, Tom, do you ever get listings where the seller wants Bitcoin? Not where the seller wants Bitcoin. We have had offers though, where the buyer wanted to buy in all Bitcoin. I've never facilitated a transaction like that. Like the transaction's never totally facilitated, but we have had buyers that have put their offer in Bitcoin. Yes, we have. Now, this is another thing that scares me a little bit. To the right, you have a tent. And this is really the only one that I've ever really seen in New York City, but for all of those San Franciscans, there's tent cities all over San Francisco. Hopefully that's not coming to New York. Hopefully this is the one-off, but yeah, hopefully. Hey, Will is here. What's up, Will? This is Tom. Will you be spending more time in Florida when the new office opens? Or still balance between New York City? Probably at first, I'll be spending a lot of time in South Florida, but always back and forth, always back and forth. I mean, the theory and the thought process is this, and this is sort of what I was talking with the team about, you know, the KJ team. I said we should go into our existing book, right? We should go into our existing book of business. Everybody we've, you know, represented on the sell side and everybody we've represented on the buy side. We should go back into that data set and talk to those customers, talk to those clients. If we sold your home or apartment, where'd you move? If you bought something in Manhattan, right, in the $5 to $10 million price range, well, where else do you own? Chances are, if you own a $5 to $10 million apartment in New York City, you have multiple places across the United States. And in New York, chances are you have a place in Florida, particularly South Florida. You know, Fort Lauderdale, Palm Beach, and all the way down to Miami. So there would be really good synergies there to represent on both sides, because our client base lives and purchases on both sides. So that's sort of the thought process there. And it would be kind of nice to get the business really kicking up and sell real estate in Florida in the winter, and even maybe develop some cool projects down there, and vice versa. And look, this is sort of the time to start building your business. When there's no deal flow, when the market is physically impossible to get anything done, when the market is totally stuck and in gridlock, and when everybody's getting out of the business, that's where you have the opportunity to generate alpha, right? Not only, and this is, you know, exactly sort of how the markets work and everything, whether you're trading equities, usually the opportunity or the probability to outperform the market is highest when you go against the grain. You take a contrarian position. So if you stick things out when market conditions are really tough, chances are you'll do really well, exceptionally well, when market conditions improve. And that may be 3 to 5 years. So who knows? All right, everybody, but unfortunately, we do have to call it a night. But I will see you all right back here tomorrow. I think we had a really good discussion, a very informative discussion today. We covered a lot. We covered existing home sales, we covered the Federal Reserve speech, and we covered Tesla's earnings report. If you enjoyed the live stream, feel free to leave a like on the video. Click the subscribe button if you're new. And yet again, if you want to receive all of our research for free, emailed directly to your inbox every other Thursday after the closing bell. Go ahead and scan the QR code, punch in your email, and you will be able to read all of our equity research for free. It's a good way to support the channel and stay informed on the financial markets. So go ahead, do that, and let me know what you think. And you will also be able to listen to it in audio version. So it'll be able to be a podcast download, and it'll be narrated by myself. So everybody, have a great rest of your Thursday, and I will see you right back here live on Friday. So thank you so much, Western Mass Dave, Abdullah, Dusty Cole, JC, all of our moderators, Daniel G from Buenos Aires, Valor Rabbit, Hang with Mark Mom. Everybody, there's always a bull market somewhere. You just need to know where to look, and I'll see you all right back here live tomorrow.